Did you know insurance was invented by the Babylonians 5,000 years ago? Insurance, a public service for taking on risks, has existed in various forms since the time when man began to write his history. The first insurance policies took the form of contracts for protection at sea and were used by Babylonian merchants around 3000 BC. These contracts, often only verbal, stipulated the granting of loans to merchants with a stipulation that, if a certain shipment of goods was lost at sea, the loan did not have to be repaid. The interest rates on these loans varied depending on the risk of the shipment, as did the cost of the policy. Both reached their highest levels during the period when the seas were haunted by pirates. The possibility of insuring goods contributed to the development of international trade, encouraging even less enterprising merchants to send their goods over distances that were considered great at the time in fairly rudimentary vessels and often in risky weather conditions. Marine transport insurance was also practiced by Hindu society around 600 BC and was already a custom in the 4th century in the Greek maritime empire. In fact, it was the Greeks who imposed written contracts, thus eliminating many of the loopholes of previous policies, whether verbal or written. Practically all the peoples who had commercial contacts with the Greeks by sea adopted these insurance contracts. Insurance policies of all kinds evolved quite early in history in their modern form, certainly before the Middle Ages. For clauses, which were remarkable at the time, remain of overwhelming importance in all types of policies today. 1. The objects insured must be sufficiently numerous and similar to permit a realistic calculation of the frequency and severity of their loss. 2. The insurance of all objects, whether commercial goods on a ship or buildings in a neighborhood, cannot be carried out by a single agent. 3. The losses must be accidental and probably beyond the control of the injured party, for it is necessary to be able to establish that the loss actually occurred and how great it was.